I've been looking at gold for years, and to me, that hasn't sunk in enough where I believe this is a new normal. It is the new price point that we're looking at. It is where we're at. So, by virtue, it is the new normal. It is what we're witnessing. Can it sustain and hold this area? Can it move higher? Can it find support, say, at 2,600, which is what I believe should happen? Oh, I'm saying the gold will be very sensitive to the rate cut. I believe that if it is a 0.25%, 25 basis points, that's been factored for the most part into pricing. However, we could easily see almost anything happen.
The Fed's rate-setting decisions are particularly important in determining the gold price, more important than those made by other policymakers like the Bank of England. Over the past 7 rate-cutting cycles from the U.S. Fed, the price of gold has risen all but once over the following 6 months, with an average gain of 7.9%. Experts predict that if the trio of low interest rates, a weak dollar, and high central bank demand continues, gold prices may rise further, especially if geopolitical tensions persist. With decades of experience in the industry, GaryWagner has become a leading voice in gold forecasting. From a technical perspective, Wagner states gold will be very sensitive to the Fed's upcoming rate cut announcement. He predicts that while markets have likely priced in a 25 basis point cut, a 50 basis point cut could trigger a significant gold rally. He emphasizes that investors will be closely watching the decision. Today's fresh gold price records came as expectations that the U.S. central bank will cut rates by a half point rather than a quarter point at its September meeting leaped towards 2 and 3 positions according to the CME Derivatives Exchange's FedWatch tool, up from Friday's level of 1 and 2. In his analysis, GaryWagner explains that gold has been trading above key moving averages. This classic bullish alignment points to positive momentum in the gold market. According to Bloomberg intelligence strategist, the price of gold has shown divergent strength, being up 84% since 2015, when the Fed just started its tightening, and could be heading for $7,000 by 2025. Now we present the clips of GaryWagner's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold's going to be exceedingly sensitive to what the Fed announces when they conclude on Wednesday. The key right now is that it's considered a certainty that there will be an announcement by the Federal Reserve to cut rates to some degree on Wednesday. The question is whether or not they will cut by 25 basis points or 50 basis points. Those odds, and this is according to the CME's FedWatch tool, have been dynamically changing. And this morning, for the first time since I have been watching all of this unfold, we saw the probability of a 50 basis point rate cut exceed the probability of a 0.25% or 25 basis point rate cut. So gold will absolutely be sensitive. My sense is that current prices have factored in A, a rate cut, and B, a rate cut of 0.25%. And so I'm not convinced that we won't see gold take off if the Fed cuts rates by 50 basis points. And that's going to be what traders, investors, market participants are going to be kind of glued to their screen or to their television watching the Fed announcement in a couple of days. So I'm saying the gold will be very sensitive to the rate cut. I believe that if it is a 0.25%, 25 basis points, that's been factored for the most part into pricing. However, we could easily see almost anything happen. And the reason I say that is the dynamic change in the CME's FedWatch tool. And what that tool is, that probability indicator that everybody looks at, is they're taking and gauging interest rate futures traders and what they're placing their bets on. And that's where the probabilities are derived. So right now, what it says is that futures traders, the professional money managers, those who are active in trading interest rate futures, now see the most likely outcome, a larger rate cut, a 50 basis point rate cut. And what you see on this chart is 3 lines. The short term is a 50-day moving average in green. Below that in a deep blue is the 100, and well below that is the 200-day moving average. The 200-day moving average is what we look at in terms of the long-term view of a market because it's basically the moving average of a year in time. And the 50-day is what most people follow. And you can see that ever since the end of July, gold has traded effectively above the 50-day. It had been above the 100 as well as 200 for a tremendously long time. Let's go ahead and center this a little bit better. There we go. So you can see that in terms of the moving averages, gold is in what's called a classic bullish formation, in which A, pricing is above all three moving averages, 50, 100, and 200, and B, you look to see if there's a widening, let's say between the 50 and 100. You can see that how narrow it was here back in August and how that's widening. And that's what we call classic bullish alignment in terms of the moving averages.
In his forecast, GaryWagner envisions gold reaching above $2,600, drawing from Fibonacci extensions. He highlights that while the current rally resembles a previous one, the Federal Reserve's rate decision will ultimately steer gold's path. While gold has hit record highs since 2015, silver continues to trail behind. In 2011, silver prices neared another all-time high, peaking at $49.21 per troy ounce on April 29th. Unlike the 1980s all-time high, the silver price run in 2011 was due to economic and geopolitical conditions rather than price manipulation. Silver exploded higher last week, gaining nearly $3, over 10%. Despite the big move, the ratio of the gold price to the silver price is still around 84-1. The long-term average for the gold-silver ratio is under 50, but it has been ranging well above that level for a decade. As gold keeps climbing, Wagner hints that silver could flirt with the $35 to $40 range, but don't hold your breath for it to hit $50 anytime soon. Let's get back to the interview.
Right now, my target, very short term, is about 26.25 with the potential to go as high as 26.50. That's based on the sidelines you see, which are basically a Fibonacci extension. So in other words, we look at this leg of the rally that began June 26th, gold sitting at 23.55, up to the conclusion before it corrected 25.30. And so you take the dollar move that it has, and then you begin to plot from the beginning of the next rally, which we labeled as a wave 3. In other words, after this price correction. And so a one-to-one move, meaning if this rally right here is equal to the current rally going on now, then it would be at least a one-to-one move, and we exceeded that last week. We're looking at a daily chart. This is Friday. This, of course, is the big move on Thursday. We could easily see it go as high as 26.25 to 26.50, but the caveat to that statement is where gold goes midweek will really be tied to the announcement by the Federal Reserve. For example, no one believes this is a likely scenario if they announce that they're holding rates where they were. They're not going to cut rates. Now, Powell's already said that it's ready for a policy change, so nobody believes that's likely. But if that occurred, we would really see gold prices decline because we're factoring in a cut. If the cut comes in, as you mentioned, at 75 basis points, and I haven't heard that one, I think that's highly unlikely. No rate cut, I believe, is absolutely improbable. 75 basis points is highly, highly unlikely. I wouldn't put any kind of odds to that. And so where gold goes will be really sensitive to what the Fed announces on Wednesday when they conclude their meeting. Let's look at it this way. Recent action in silver in terms of going to a high have been around $33. Middle of 2011, gold breaks above a level it's never been at, $1,900 per ounce. We look at that now as inexpensive, but that was big. And at the same time, silver moved to $50. What followed after the all-time record highs came in both gold and silver was actually took an exceeding amount of patience, because between the middle of 2011 and the end of 2015, we watched a slow and methodical price decline in both metals. Gold went from $1,900 of $1,020. So it basically lost half of its value. And then a rally began and it built steam and then went to multiple all-time record highs and closes. At the same time, silver never challenged or got near $50 an ounce. And this is the recent high at $33. This is what I would look at. If gold continues to rise, I believe silver will take out $33. If gold continues to run, silver could maybe challenge $35 to $40, but there's no indication currently that silver is going to make a run for its all-time high, which is around $50.
For good reason, investors have been watching gold's price trends over the past several months. According to Goldman Sachs research, the price of gold has soared to new heights this year and is positioned to climb into early 2025, rising to new record highs. How do you think the Federal Reserve's future decision will impact gold and silver prices in the near term? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.